happen if China sold all their US debt? You came here for the truth, so let me unveil that for you. In today's video, I'm going to show you how little China has right now at this time. In fact, it's down half of what it used to be. I'm going to show you who's a buyer. I'm going to give you an explanation as to what this all means. Connect that in with rate cuts and what's going on with the US dollar. So we're going to break that all down today. I'm going to make it real easy to understand for everybody because this stuff can get real complicated. But on this channel, I make it easy. We get rid of the jargon. All right, let's begin. First thing, China should trim U.S. Treasury holdings. That's according to an ex-PBOC, that's the People's Bank of China, advisor. Appeal of U.S. debt to other nations is waning. China is the number 2 foreign holder of treasuries after Japan. That is absolutely true, but I'll give you the breakdown directly from the Treasury's own resources. And while he's talking about this has already happened. It's not as if something, in the future. But I believe what they want to do is make that, to an even greater degree. And this type of information is released into the public intentionally to see the reaction. How does the market react? Does the US say anything? Are there any actions that are being taken? Well, as they say here, therefore, China should accelerate the adjustment of its overseas asset and liability structure, improve returns on overseas net assets, and lower the share of foreign exchange reserves in its overseas assets. The nation should trim its ownership of treasuries by stopping the purchase of new notes after existing holdings mature. Interesting. What's happening? What's going on? Well, it is very clear that we have this battle going on between China and the United States very clearly. China holds on to the US debt just as they hold on to euros. They hold on to everything else. But now it's coming at a time in which China said, you know what? We're going to reduce our holdings slowly but surely. We're going to get rid of this. At the same time, they could be using it for their own purposes because every country has foreign exchange reserves. But right now it seems like they're going far past what we had seen previously. Okay, they're still holding on to a lot, don't get me wrong. But right now what we've seen, this inverse relationship between the US dollar and the stock market. When you look at the US dollar in how it has performed over the past couple of years, just up and up and up and up. But as the rhetoric for, the Federal Reserve has been kind of like, we might cut rates. Yeah, we might go in that direction. The more of that talk, the weakening of the US dollar had been taking place. On the other end, when the dollar had been weakening, of course, the stock market has been going up. Okay, so these are definitely, at this time anyway, inversely correlated. We have this. Households and corporates are the smallest holder of treasuries. And so you could see that right there with that, golden colored line right now. And that is compared with the financial companies. You've got the Federal Reserve that's been reducing their holdings. And it has been very clear, certainly, that while the Federal Reserve has been selling off, others, such as those households and corporations, have been buying the treasuries. So when we talk about liquidity, this is overall, right? Overall. And why have they been buying it? Because the rates have been so good. I can get a 5% guarantee. I can get a 5% return on my money in a time of a lot of uncertainty. Oh no, is it a recession? What's happening? I'm going to go back into lockdown. All that. I can get 5% on my money. So what's happening? Investors have been doing that. Now things have changed. The yields have been coming down. Mortgage rates have been coming down. We'll see what happens there. But at least at this time, it was a very attractive thing for both the households looking for a little place to park their cash as inflation was piling up, as well as the corporations looking to put their money somewhere. You got Warren Buffett holding well over $150 billion worth of it. Apple has a large sum as well, okay? And it's not cash. It's quote unquote cash. What we're talking about is, US debt so they can get a return on that investment. Okay, remember that. Whenever they say Warren Buffett's holding $150 billion of cash, it's not actually cash, okay? He's not stuffing $150 billion under the mattress, though that probably would be pretty fun to see. All right, rates have never been as elevated when debt has been so high. And that's something to think about, okay? Because it's unsustainable. Obviously, even at low interest rates, the debt is unsustainable. But keep that in mind. And that goes for the corporations, that goes for countries as well. They can't, they can't do that. I mean, they can only raise taxes so far and still not pay anything. Like even now, they can't pay all that. But that's where we are at today. So just keep that in mind, okay? This is just showing us in chart form. The way that they combined this was China as well as Belgium. Belgium is not actually Belgium. Often people say Belgium is really just, the companies that are there in the EU. And so that's kind of a proxy in that way. But they've been declining. We haven't seen these levels since 2010. Okay, and the chart I know is like super small font. All you need to know is that China has reduced their holdings down to, remember this, okay, $769 billion. That is approximately half of where they were years ago. So when people say, like, you got to zoom out, okay, and the trend, I mean, it goes up, it goes down, as you'll see, but it has been trending down lower and lower for years. And so this has obviously been the plan. It's not, people think, oh, it's just because of, this like event happens over the last couple months, or maybe it's been a year ago or 2 years ago. No, it's been going on for years. They've been reducing their holdings. They realize, they see the writing on the wall that, hey, it's probably not so good to hold that much US debt. I don't see them getting rid of it. Okay, I don't. At least, something happens, but they want to make it a little bit more balanced. So they're, letting that stuff mature. They're already doing that. And of course, the US has to say, okay, the Federal Reserve isn't buying it. China's letting it go. We need to find somebody else. Well, if those yields are coming down, you're going to have less investors willing to buy your debt. So who comes to buy it? Okay. The households aren't going to buy it or as much. The corporations aren't going to buy it. China's not going to buy it. Do we have a printing press lying around in which we could use? Let me tell you. Federal Reserve, the buyer of last resort. What about this? World Treasury Reserve holdings, you could see, declining. But gold, looking at this, you can see that more central banks have been buying gold. And it's so odd, it's so funny. Every time I see it, the central bank that can print an unlimited amount of money, they're the ones buying gold. Isn't that strange? The way it works. They see the value. Oh, but Ben Bernanke said, it's just a tradition. Sure is. Yeah, sure is. Just a tradition. So we have, all this is basically just showing us different members of the Fed, central banks, analysts, all saying the same thing. Yeah, I know what Powell kind of told everybody, but no, we're not ready to cut interest rates yet. Don't get that into your head. And so that came out like 100 times afterwards. The market was just like, ignore, because they wanted to see the risk on. But understand this. If you have those rate cuts, the dollar weakens further, potentially, depends on what happens with other countries. And of course, that could create more risk on mentality. Keep that in mind, okay? People think that the money is going to go dumping into US debt. Maybe in comparison to other countries, it might still look attractive. But hey, maybe I want to take some more risk. Maybe I'm going to put it into Bitcoin. Maybe I'm going to put it into stocks. Rally has more room to run as investors get 3 green lights. Not just 1 green light, but 3. Okay, keep that in mind. Okay, that's all I'm trying to say. You got to stay ahead of the game. Okay, and how are you going to do that? Come over to my website, link in the description, because every Friday I conduct what I call the Money GPS Finance Live. Okay. And this is basically a very small class group session where we go over all these elements. It's an incredible group of people, small class, and this is the kind of thing, it's only for a select few members. If you want, check out the link in the description. Right on the top there, there'll be a link, read through the whole page. If you want to, just click on the apply button. That will basically email me, and from there we can, see if you want to get in on that. I hope you will, because you want the latest and greatest information. You want the best knowledge. And that's what I do on the Finance Fridays, okay? So I want to thank you for being here today. Hit the thumbs up a thumbs up on this video. I do appreciate it very much. And of course, I'll see you tomorrow. Take care.